Good afternoon, everybody. Thank you for your patience. Welcome to Azzad Asset Management's webcast on Sukuk investing in uncertain times. As the title of the presentation today explains, we're here to talk to you about the world of Sukuk, which are sometimes referred to as Islamic bonds. Sukuk are increasingly growing in popularity as an alternative asset that offers exposure to emerging and international markets in addition to yield. And today we're going to explore the investment potential of this unique asset class by looking at their behavior and risk profiles in different market environments. So moving right along here, we'll go through this a little more quickly since we got off to a late start. Slide 2, here's a rundown of what we'll be discussing today. The focus of the webcast is going to be on the two sections in the middle of your screen, a brief history of Sukuk, and also our outlook for the market in light of various market-moving events, like, for example, the eventual tapering of bond purchases by the U.S. Federal Reserve, which got a lot of play during the summer months and is expected to occur in 2014, but time will tell. All right, slide 3. Let's go ahead and meet the lineup here. Slide 4, going from left to right, your presenters for today will be Jamal Elbarmil, who's the Azzad Vice President and Portfolio Manager for the Azzad Wise Capital Fund, and Ahsan Raheem, CFA, who's an analyst here with us at Azzad. Ahsan works with Jamal to identify Sukuk for the Azzad Wise Capital Fund portfolio. And I'm Josh Brockwell, Investment Communications Director here at Azzad, and obviously not a technology guru. I'll be moderating the webcast discussion between our two experts today. Welcome, gentlemen.
Thank you, Josh.
All righty, moving right along. A word from our sponsor about Azzad Asset Management. Just to very quickly give you some background on who we are and what we do. We're a boutique investment firm located just outside Washington, D.C., here in Falls Church, Virginia, registered with the SEC as an investment advisory firm, and we work primarily with affluent clients nationwide. In addition, though, to serving as independent financial advisors, we also manage and sponsor two publicly traded mutual funds, including the Azzad Wise Capital Fund, which we're going to talk a little bit about today, as we explained in the agenda. We also handle model portfolios for institutional and retail clients. And our team here at Azzad consists of chartered financial analysts, CFAs, as well as certified financial planners, also known as CFPs. So, slide 6, a quick word about our philosophy. We're probably going to look a little different from some of the more traditional registered investment advisors you come across, and one main reason for this is our dual mission philosophy. So this mission focuses on generating competitive, long-term financial returns while also using investment capital to promote a sustainable economy and a positive social impact. And our vision here at Azzad is a world in which investment capital helps to build a sustainable and equitable economy. As such, all of our products and investments comply with halal investment guidelines as established by the Accounting and Auditing Organization for Islamic Financial Institutions, or AOFI. You'll probably hear us talk about AOFI a couple other times in this webcast today. This means that we steer clear of investments that run afoul of Islamic principles. That's what halal investing is. No companies with impermissible lines of business like alcohol, pornography, weapons of mass destruction, and the like, also known sometimes as sin stocks. And perhaps most relevant to the conversation today, in keeping with our philosophy, we abstain from interest-based transactions, and this is because of their impermissibility in Islam. We're also a member of the Forum for Sustainable and Responsible Investment, or the USSIF, as you see on the screen there. So, moving right along to slide 7, now that we've caught up, let's discuss the origins, performance, and risk profile of Sukuk. For that, we'll turn it over to Jamal Elbarmil, who's the lead PM for the Azzad Wise Capital Fund. Jamal.
Thanks, Josh. Sukuk are often considered the Islamic alternative to bonds because they don't represent an interest-based transaction. Fixed income products and access to capital are still important parts of a capital, corporate, or sovereign capital structure. Upwards of 75% of global markets are comprised of fixed income or debt instruments. So Sukuk were created as a solution to fill the void in the Islamic economy. There are either asset-based or asset-backed and offer cash behavior similar to bonds, though not guaranteed. Next slide.
Slide 9.
Now, this slide shows the linguistic meaning of Sukuk. Sukuk means, it's a plural for sak, which means contract. And according to AOFI, again, which stands for the Accounting and Auditing Organization for Islamic Financial Institutions. IOFI defines them as certificates of equal value, representing undivided shares in ownership of tangible assets, use of rights, and services. The first successful launch of Sukuk actually was introduced by the Malaysian government in 1983. And during the mid-2000s, government institutions and central banks began introducing short-term Sukuks for managing market liquidity and financial government spending. Next slide, please.
So slide 10. Before we get into exactly how Sukuk perform during these uncertain times and how they've performed historically, Jamal, tell us a little bit about the different types of Sukuk out there.
Sure. I think the Dow Jones, in this case, the Dow Jones Sukuk Index will represent like a story to tell about Sukuk, including how they perform in different market conditions. The index was launched in 2005, and it serves as a good proxy for the global Sukuk market. The index itself includes Sukuk that are US dollar denominated. The Sukuk has to be above investment grade, and they have to be above $200 in value.
So 200 million there for the Dow Jones Sukuk Index.
Yes.
Okay, and slide 11. Let's take a look at the countries that make up the Dow Jones Sukuk Index very briefly.
Exactly. So for sake of simplicity, we will refer to the major issuers of Sukuk as either GCC or non-GCC nations. For the GCC, which stands for the Gulf Cooperation Council, the players are the United Arab Emirates, Saudi Arabia, Kuwait, Qatar, Bahrain, and Oman. Think of it as the European Union for the Persian Gulf states. The United Arab Emirates and Saudi Arabia are the largest Sukuk originators in the GCC region, both of which issue Sukuk in US dollars. Non-GCC nations include Turkey, Indonesia, and Malaysia. It is important to note here that the GCC nations give the Dow Jones Sukuk Index a unique risk profile, which is different from any typical emerging market bond index.
Okay, so with that, let's take a look at slide 12. And just piggybacking a little bit on what Jamal just said, this slide is going to show how the Dow Jones Sukuk Index diverges a bit from its more conventional bond index peers. So the correlation percentage you see there is a measure of the degree of linear relationship between the index, which we've listed on the x-axis, and the Dow Jones Sukuk Index. Apologies for this being a little bit technical. But for the uninitiated, just very quickly, correlation means correlation, or the degree to which two variables sort of go together. At a correlation of 100% on that chart there, the indices that we've lined up in various green colors would move in lockstep with the Dow Jones Sukuk Index. So if they went all the way to the top, it would be a one-to-one relationship. Instead, what we see very clearly in some instances, there's only a weak relationship at points between the Dow Jones Sukuk Index and the indices plotted here. And this is definitely important from an asset allocation standpoint, since investors often look for asset classes that don't always perform the same way.
That's right, Josh. The Dow Jones Sukuk Index generally shows relatively low correlations against conventional fixed income markets, represented by JP Morgan Emerging Market Global Index, which is like an emerging market index, and the Barclays U.S. Aggregate Bond Index, representing a U.S. bond index. And the third one is the Bank of America Merrill Lynch 1 to 3 year, representing the benchmark for our fund. We attribute this in part to exposure to the index exposure to the GCC Sukuk, which we will cover in upcoming slides.
Okay, so first though, this is kind of the meat and potatoes of the presentation here, slide 13. Let's talk a little bit about the Dow Jones Sukuk Index as a whole and how it held up during the financial crisis that began with that collapse of Lehman Brothers. We won't soon forget that. Happened about 5 years ago, and it kicked off the Great Recession. This is sort of a test case or a proving ground for Sukuk to show how they hold up in certain environments. So, Ahsan, Raheem, do you want to take a minute to tell us what we're looking at here on the screen?
Sure, Josh, thanks. We are using the JP Morgan Emerging Markets Bond Index to represent emerging market debt as a whole. This is in red color. The Barclays U.S. Aggregate Bond Index shows the performance of U.S. debt, that is in yellow color. And lastly, the Dow Jones Sukuk Index is in green.
Okay, thanks. Jamal, want to comment?
Yeah, I mean, this slide shows how the Dow Jones Sukuk Index performed during and after the crisis of 2008. Sukuk initially lagged their global and U.S. bond counterparts, but you will see here that they eventually recovered in line with the conventional bond indices. We attribute some of the relative underperformance early in the crisis to the relatively short track record of the Dow Jones Sukuk Index, along with a lack of institutional investor participation, driven in part by the perception of Sukuk as an exotic asset class with unproven track record. Finally, the index itself had few holdings at the time, about 20 Sukuks.
Slide,
please.
14, here we go.
Now, if you compare the previous slide with this one here, representing this year, which had its own share of shocks to the system, although to a lesser degree, this past May, fixed income took a big hit across the board as the U.S. Central Bank, the Federal Reserve, appeared ready to taper their bond buying scheme, putting downward pressure on prices. In line with the conventional fixed income markets, Sukuk prices declined on the flight to safety. Interestingly, although the Sukuk followed the trend line down, they outperformed their global and domestic peers on a relative basis, not falling as far and rallying nicely. We attribute this to the maturity of both the investor class as well as the index itself, which saw more names added since the 2008 crisis. The Dow Jones Sukuk Index was not subject to exactly the same market forces as their debt market, of course, owing to a large portion of the GC Sukuk in the index.
As we noticed in the slide, that the Dow Jones Sukuk Index, represented by the green line on the chart, outperformed the peer benchmarks by almost 6%.
Okay, slide 15 now.
The Dow Jones Sukuk Index as a whole outperformed the peer benchmarks during this volatile summer period, as we have noted in the last slide, not falling as much, but certain Sukuk fell more. Let me just quickly point out that the duration of a Sukuk or a bond is a measure of its interest rate sensitivity. Technically, it's a time-weighted average of all its future cash flows. So Sukuk with short maturities have short durations and are relatively less sensitive to changes in interest rates compared to long-duration Sukuks. This slide shows the performance of various short-duration Sukuks, those maturing less than 5 years. There were some countries within each duration class that were more exposed to the effects of Fed tapering rumors. For example, Indonesian and Turkish Sukuks fell more than their GCC counterparts.
Slide 16 now.
Right. In this slide, the decline for longer maturity Sukuks was even bigger over this time frame. For example, the Indonesian 10-year Sukuk fell by 24% compared to Qatari or Saudi Sukuks, which fell in a range of 7 to 10%.
Okay, and we also want to point out that the reason we selected this time frame to show the performance of shorter versus longer duration Sukuk is that on May 21st, that's when the Federal Reserve Chairman Ben Bernanke started sort of hinting at the prospect of the eventual tapering of bond purchases, which is commonly referred to as quantitative easing or QE. So that sort of set off what a lot of participants in the market call a taper tantrum, and it triggered a period of relative volatility in the market. So it's sort of, again, a real-life practical example of the ways that certain Sukuk perform. With that, though, looking at slide 17, Ahsan, we should point out that it wasn't just performance that took a hit, but as a result of this, the number of issues probably declined as well. Is that the case?
That is correct, Josh. Sukuk issuance has taken a hit since Fed tapering rumors began. Year 2013 started with a strong quarter in terms of issuance, but towards the end of quarter two, Due to uncertainty created by Fed tapering rumors, Sukuk yields rose sharply. This resulted in fewer Sukuk issues. The trend continued for most of the third quarter until in September, when the Fed announced that it would maintain monthly asset purchases. This was welcome news for fixed income markets, and as a result, global Sukuk yields fell by 18 basis points.
Yeah, I would add to what Ahsan just said that there are two other factors we should mention here that could have reduced the Sukuk issuance during this time period. The hot summer months in the Middle East and the fact that Ramadan, the whole month of fasting, began in July this year. Both probably had an effect on output and productivity.
Okay, so with that, let's take a look at slide 18, which gets us into the diversification within that Dow Jones Sukuk index. Obviously, I'll point out, you're not able to invest in an index directly, but again, as we mentioned today, the Dow Jones Sukuk index is a good proxy for the global Sukuk market as a whole. That's why we're using it today during the discussion, which I believe Jamal alluded to. But let's flesh out the details, and we think this slide does a good job of it. It really illustrates the fact that the components of the index are diverse, and you'll see there it's made of Sukuk from regions with sometimes dramatically different economic circumstances. And that's important to understand when anyone is considering an investment in Sukuk. So, for example, countries with somewhat challenging economic conditions like in Indonesia might offer a higher yield, but the trade-off is going to be stability. The GCC or Gulf Cooperation Council countries may sometimes offer lower yields, but their relatively high rates of savings and lower inflation make them attractive destinations for capital for some investors. The Dow Jones Sukuk Index includes both types. So we're going to take a look under the hood here with Ahsan, but very quickly, let me just point out, as you look at that chart, what we've done is color-coded the GCC and non-GCC members. The non-Gulf Cooperation Council members are in that sort of mustard or gold color, whereas the GCC members are in the blue, gray, periwinkle color. And as an added service to our listeners today, we have created bubbles that are essentially reflect the size of the relative economies, strength of the economies, and growth of the nation. So the GDP growth, or the actual size of the GDP, is going to be a function of the bubble. So you have big countries like Malaysia with a GDP of $900+ billion annually. It's going to be a big bubble there, whereas you compare it to a Bahrain, for example, which I think has a GDP, it looks like, of $27 billion. So it's going to be a smaller little dot there. But Ahsan, Raheem, why don't you, on slide 19, help us dig into the details here and show us these countries from different perspectives. The first slide that we're looking at here is current account balances and government debt as a percent of GDP. You want to comment on that?
Sure. A country's current account balance is an important indicator of economic health. A positive current account balance indicates that a nation is a net lender to the rest of the world, while a negative current account balance indicates that it's a net borrower. What we see in this slide is that both Turkey and Indonesia have current account deficits, which means they are net borrowers and need cash to fund their investments. Compare this to the GCC countries, which due to their large oil-driven exports have current account surpluses. Moreover, GCC countries have on average low level of government debt.
Okay, so let's look at slide 20, which shows us sort of the savings and investment here as a percentage of GDP for these nations.
This slide further highlights that GCC nations are net savers. They have accumulated huge savings which can internally fund their investments. They have healthy balance sheets with excess liquidity. So in a crisis, they don't have to go into the debt market like their non-GCC counterparts.
Slide 21 is an interesting one on currency depreciation and foreign reserves for these countries.
The GCC currencies are either pegged to the dollar or a basket of currencies. These countries do not need more foreign reserves to protect themselves from external events such as Fed tapering like their non-GCC counterparts. For example, the Indonesian rupee depreciated by almost 15% from May 21st until September 17, and they have only 6% in foreign exchange reserves to give support to their falling currency.
So that's an important point, right? Because when we see less accommodative monetary policy, like a pullback in bond purchases, or an end to QE infinity, this has an adverse impact on bond prices, which are going to move opposite yields. So when the Fed ends its purchases, this allows rates to rise rather than being sort of artificially depressed, as arguably they are now. So when this happens, a lot of that institutional money in search of yield overseas is going to come back home to roost. Is that sort of the way things shake out?
Exactly. When the yields go up, the prices of Sukuks go down. So certain components of the Dow Jones Sukuk Index are exposed to this possibility. The GCC nations are not. This all goes to show that Dow Jones Sukuk Index is not a typical emerging market index.
So that being said, and we hope you appreciate sort of the practitioner's approach to looking at Sukuk and the Dow Jones Sukuk Index, because a lot of the literature out there has to do with more theoretical, and this is really a practical application of this particular asset class. We're now going to turn to where we think the Sukuk market, as represented by that Dow Jones Sukuk Index, is headed from here. Moving on to slide 23 now. Here's a look at issuances of Sukuk since 2002. Obviously, the picture is one of an asset in demand. Ahsan, that trend line is going up and to the right, sir.
Clearly, growth has been strong, especially the last 3 years, which contributed more than 60% of total Sukuk issuance in terms of value.
Okay, so 60% over the last 3 years. And slide 24, where do we think the demand is going? Do we think it's going to hold up to justify even more issues?
Based on a number of data points, we project that Sukuk demand will continue to outstrip supply, despite the increased growth in issuance. Sukuk demand is broadly driven by two major investment groups. First, Islamic investors, and second, all other investors looking for opportunities to gain access to Sukuk credits for exposure to emerging market yields. We expect that Sharia-compliant assets will grow by 15% on an annual basis, in line with growth estimates from Ernst & Young, Deutsche Bank, and Kuwait Finance House, which actually has made higher forecasts of around 18 to 20%. Global Sukuk demand is expected to almost double from $240 billion in 2012 to reach $421 billion by 2016.
Okay, so slide 25. All that being said, what is the future or possible future of Sukuk?
The strong performance of the Sukuk market in terms of spread resilience, efficient distribution, and the exposure to new markets and revenue streams has made them an attractive solution for Western institutional investors. Also, large conventional players with global market reach have helped in terms of distribution to achieve broader investor consensus and added depth to the market by increasing their participation. It is also important to mention that larger pool of outstanding sovereign Sukuks, which are acting as key benchmarks in various jurisdictions, as well as the declining bond and Sukuk yields outside of Europe, have reduced the cost of borrowing on the corporate front in recent years. As a result, corporate Sukuk issuance have surged beyond the pre-crisis levels, pushing total global issuance to record highs.
I would say, in addition to what Ahsan just said, that the still nascent stage of the Sukuk market, in comparison to the global bond markets, means that the room for growth remains substantial. As regulators become more serious about the viability of Sukuk instruments, as well as the ongoing potential to raise funds at a lower cost on the back of significantly low Sukuk yields, there will be the potential for new Sukuk issuers to tap this market. Regional dynamics, of course, are also an important factor for issuers wishing to access the liquid markets such as the GCC and emerging Asia.
Okay, so with that, let's talk briefly now about the Azzad Wise Capital Fund, which is the first and only SEC-registered mutual fund that allows individual investors access to the Sukuk market. Very quickly here, we'll take a look at slide 27. We'll take a look at the Azzad Wise Capital Fund's highlights, ticker symbol WISEX. The fund seeks to preserve capital, provide fixed income as well. And we don't have a big appetite for fluctuation with the fund. Just so you know, it's typically categorized as a short-term bond fund. And due to the lack of Islamic fixed income investments in the United States, simply an issue of supply and demand, we structured the fund for exposure to emerging markets because that's where Islamic fixed income options were available. And also to reduce volatility, we should mention that we allocate a percentage of the portfolio to bank deposits, which I'll let Jamal talk about a little bit later. But before that, I'll turn it over to him to touch briefly on performance and allocation for WiseX. Jamal?
Yes, thanks, Josh. You will see that as of September 30th, just under half of the fund is allocated to Sukuk. Also, it is interesting to note that quarter to date, which means as the end of end of last quarter 3, the Dow Jones Sukuk index is down roughly 1%, while the Azzad Wise Capital Fund is up roughly 1%, not a fee. One of the reasons the fund did not drop as much as the index is due to the fund's allocation to Islamic bank deposits or notes. All of the performance data quoted here can be checked online through data providers such as Morningstar, Lipper, Yahoo Finance, and so forth.
Okay, slide 29. As I mentioned, the fund also invests in Islamic bank deposits. Here's a quick overview of how the Islamic bank deposits work. Jamal, do you want to very quickly speak to this?
Sure. With Islamic bank deposits, when you put your money with a bank, you are actually investing in the primary market. With Turkish banks or Indonesian banks, your money is adding a real impact to the economy. So when you actually put your money with a participating bank, you are participating actually at the same time in infrastructure projects or microfinance projects or halal mortgages, or you might be financing machinery for factories, for example.
Okay, so that's in keeping with that Islamic idea
exactly.
that interest is prohibited, so you need some sort of asset or service to come between
exactly.
money now versus money later.
Exactly.
Okay, we should also point out, of course, that unlike conventional bank deposits in the United States, Islamic bank deposits are not insured, and you can still lose money in such an arrangement.
Yes.
All right, next slide, the holdings for the Azzad Wise Capital Fund.
Exactly. So this is the composition of the fund as of June 30th. The smaller parts of the pie are the Sukuk, and our policy is not to invest any Sukuk above 5%. Now, the larger parts of the pie are the Islamic bank deposits. For example, we have Turkey Finance at 13%, at Kuwait Turk Bank at also around 13%. So the intention here is to diversify among bank deposits and Sukuk.
All right, slide 31, the country allocation for the Azzad Wise Capital Fund.
So this is how the fund is diversified among different countries. And here, of course, the pie shows where the fund holdings are allocated at the country level as of September 30th. This includes, of course, Islamic bank deposits, as we mentioned earlier, and the Sukuk, which have a different performance than Islamic bank deposits. The top Sukuk are listed in the table on the right.
Okay, so we'll point out, though, that if you're looking at the pie on the left side of your screen, that is the overall geographic diversification of the fund. So that's inclusive of Islamic banks as well as Sukuk.
Yes.
Whereas the table on the right is just going to be top Sukuk as a percentage of the portfolio.
Mm-hmm.
Okay, so with that, slide 32, WiseX maturity and credit ratings.
Yeah. We mentioned earlier that the intention of the fund is to preserve capital and provide income. And as such, the maturity and credit rating, as you can see here on this screen, the ratings are structured to meet these objectives. So the fund has higher ratings and lower duration. Okay,
and slide 33. This is an overview of the WiseX investment process with our 4-quadrant methodology.
Exactly. And let me give you a summary of our process here. We start by looking for opportunities. So this is quadrant 1, which is searching for opportunities. We look actually all over the world for opportunities for the fund. We look for banks. And I actually travel personally to different countries to meet banks and look for opportunities there. And it's not just bank deposits, but also at the same time we look for Sukuk. And once we identify those, we look at their risk assessment. We have to look at the same time at their financial ratios, and we also do compliance on these banks and the underlying holdings of the fund. At the same time, we look at the risk-return ratios for the fund to make sure that they comply within our standards. Once we finish that, we go to the next step, which is the portfolio construction. Now, once we identified the bank deposits, the Sukuks that are in line with our guidelines, we mix them together so they are in compliance with the fund objective, which is the capital preservation and fixed income. At the same time, we diversified, as I showed you earlier, we diversify among bank deposits and Sukuk, so we don't invest in one, say, issue, and it turned out that it is a bad decision, and then the fund might drop dramatically. At the same time, we look at the credit quality of either the bank deposit or the Sukuk. We try to have the duration within a small number, so it is below the 3-year for the whole fund. And then when we finish the portfolio, then we have the portfolio ready, we invest in it, and it's running for a while. So at the same time, once that is running, we don't just set it and forget it. We continuously monitor the fund all the time. So once that thing is done, we do credit risk, market risk, liquidity risk on all the holdings all the time, like on constant basis. And remember that we are dealing here with emerging market nations, and there are a lot of political issues and macroeconomic issues that we have to take into consideration. That's why sovereign risk is really very important for us, since that might affect the fund dramatically. At the same time, we continuously monitor the performance of each underlying and the fund as a whole to make sure that the risk-return characteristics are in compliance with the fund's goals.
Okay, so that was the WiseX investment process, sort of in brief. I'll also draw your attention to slide 34, the disclosure information. We'll give you a moment here to read that. Please learn it, memorize it, recite it to your kids. And with that, technically the official portion of today's webcast is over, but we do have a little bit of time, despite the fact that we had that technical issue. Again, my apologies with that. It's really strange. We'll have to talk to our vendor, but that being said, we still have some time. So what I wanted to do was open up the presentation to a few questions from our callers, but I will also say before we do that, I wanted to make mention of the fact that we tried something a little novel or different this time around with our question and answers. We opened up the Q&A to the Twitterverse, or Twittersphere, and solicited DMs or direct messages and tweets from our followers. One of the ones I will just use the moderator prerogative and throw out the first question. One of the most popular questions I think a lot of people are asking, and I'll put it out there as a toss-up to our two experts, has to do with what happened most recently during the debt ceiling crisis and a lot of that political brinksmanship that we saw. Obviously, fixed income markets were on sort of tenterhooks and people were concerned. Any insight as to how Sukuk performed during that government shutdown, debt ceiling crisis, as well as maybe looking ahead to Janet Yellen's eventual assumption of duties as the chair of the Federal Reserve?
Thank you, Josh. During this period, which started from October 1st and ends October 21st, the 3 weeks, interestingly, all the fixed income markets did pretty well. Dow Jones Sukuk Index was up 1.09%, whereas the emerging market JP Morgan Index was up 2.27%, and Barclays US Aggregate Bond Index was up 56 basis points. So again, Sukuk Index explains that it's trying to lower the volatility on the downside, as well as it doesn't shoot up when the things start rallying. So it's a pretty modest benchmark, and it behaves differently than a typical emerging market bond index.
Exactly. I mean, if we want also to look at the tapering issue of what happened to that, actually, if we can go back to slide number 14, which shows how the Dow Jones Sukuk Index behaved compared to typical like emerging market index.
14. Okay.
14, yes.
Almost there.
Yes.
Got it.
Okay, so we're here. So you will see here, like in the green, the Dow Jones Sukuk Index actually didn't drop as much as your typical emerging market index, and that was due to the GCC component in the Dow Jones Sukuk. Remember, the GCC nations maybe contribute over, I would say, maybe more than 70% of the Sukuk, Dow Jones Sukuk. And the GCC nations, since they are not really as affected as, say, your typical emerging market country, like, for example, Indonesia or Turkey, then it will not drop as much. So the drop was not as much as you would expect for an emerging market. Just to explain it more, if we switch to slide number 19.
Okay.
Now, slide number 19 shows the current account balance. The GCC nations, actually, if you look at the slide, actually, they're actually collecting cash every year. They're swimming in cash, actually. But if you compare them, say, to Turkey and Indonesia, they're actually losing foreign currency all the time. They make them strapped for cash. Even rumor of tapering by the Federal Reserve would affect these two countries a lot. But if you compare that to the GCC countries, but even if tapering happens and people started, say, withdrawing money for flight for safety from the Gulf states, but they still have a lot of cash, so I don't think that will affect them that much, and I would attribute that relatively smaller drop in the Dow Jones Sukuk because of the bigger exposure to the GCC nations.
Okay. So since I kind of got the ball rolling, let me go ahead and open it up to our very patient participants here today. What I'll do is I'll put the phone, hopefully, barring any other unforeseen issues, into Q&A mode. What that's going to do, it's going to keep you muted, but it's going to allow you to unmute your phone by pressing *6. So if anybody has a question after I do this, you can hit *6 and give us your name, your affiliation, and then your question. Let me go ahead and put it in Q&A mode. So if anybody has anything they'd like to add or any questions for our panel of experts here today, *6 will allow you to join the conversation. And if not, that's okay too, because we anticipated finishing up a little early today, and we want to respect your time. Any takers? We do have a question. It looks like via chat. What's the major difference between Sukuk and conventional revenue bonds? Revenue bonds also infrastructure-backed program. Thanks. Ahsan, do you want to take that?
The main difference is in a Sukuk you have, as a certificate holder, ownership to the underlying assets. Unlike an asset-based or asset-backed bond where you don't have a ownership, the certificate, the regular conventional bond certificate doesn't give you the ownership. It only gives you claims to the underlying assets in terms of revenues and the cash flows, but not the ownership. Here, when you buy a Sukuk, you buy the ownership in the underlying assets.
Okay, hopefully that answers your question. Many thanks. You are most welcome. So with that, looks like we've got about 5 minutes to go. So we'll go ahead and we can continue the conversation offline. Let me tell you how to get in touch with us. But before I do that, let me just say that concludes today's presentation. Thank you again for your time and your patience. Let me mention that you can always visit our website, azzadfunds.com. That's AZZADFUNDS.com, where you can download and read your free copy of the prospectus for the Azzad West Capital Fund, which we talked about. I'll also note that the prospectus contains more information about the fund's risks, expenses, and investment strategy. While you're there, and I want to mention this, you can also sign up to receive our monthly e-newsletter to get more information about Sukuk and other Islamic financial products and services. Finally, last but not least, do be sure to follow us on Twitter. The handle is @AzzadFunds, all one word. If you're not on Twitter, and I just learned this, it's called Fast Follow on your cell phone, you can just text the phrase follow Azzad Funds, so that's all one word, Azzad Funds, follow space Azzad Funds, to 40404, and you can receive our tweets as text messages. Finally, let me note that a recorded version of this presentation, minus that little snafu at the beginning, will be posted to our YouTube channel. That's actually youtube.com/Azzad Funds in the next few days. So please be sure to take a look when you get a chance. Thank you again for your time. Thank you, gentlemen, for serving as our experts today on the panel.
Thank you. Thank you, Josh.
Thanks, everybody, and have a great rest of your afternoon.